This is James Pelton, and I have my last. Actually, it's not an AMA. I'm so used to saying AMA, I forget. Sometimes I do just live walkthroughs. So the standard.io is going to be what I'm talking about today. It's a stable coin or a group of stable coins, I should say, that are backed by gold, BTC, and Ethereum. And actually, we do have Josh here. Hey, Josh, how's it going, brother?
Hey, good. I'm staying. I just arrived in Australia, as you can see, with the mosquito nets and the Hiluxes outside is very Australian.
Yes, no, I've not been to Australia, but I hear they have some large spiders. Have you seen those yet?
Yeah. I've
Okay.
already on the first day.
That's enough to keep me away, personally. So yeah, so we're talking about the standard.io today. And again, if anybody has questions, we have a full AMA, and I put the link. So we might not go into it quite as deeply as we did last time, just because we have that hour-long video where we talk through about every single aspect. So if you're looking for to dive really far in, then go to that link and watch that video. Did want to just talk about what is new, when the launch is going, things like that. So let me share the screen here. Share screen. So first thing I want people to see live now. So the sEuro is minting now. Is that correct? You want to talk a little bit about that?
Yeah, that's right. So for those that don't know, how we're launching is that we're launching through an IBCO mechanism, which is an initial bonding curve offering. And how this works is basically to build a big pool of liquidity that that the stablecoin will have as a stability pool. We sell the first stablecoins at a discount. So the first stablecoins were sold at 80 cents, and the more liquidity that comes in, the less that discount becomes. So it rewards people that have come in early to help the protocol out, but it also allows for them to really earn a fast yield, so an instant yield. So you're basically buying an sEuro for 80 cents, and then that you can see that curve as it gets less. Now the thing is, once you've bought that for 80 cents, no one's going to offer you an sEuro for more than 80 cents because they can just come here and buy it. So what we do is we have the next stage, which is sEuro bonding, where you can bond your newly minted sEuro with USDC and actually put that into a liquidity pool on Uniswap and basically bond that together. And in that moment, you actually get the full euro value in that bond. So it's a really great little yield farming exercise. It helps the protocol bump up. I know we're in the middle of this amazing bear market, but it's actually a good time to build. And so this is what we're doing. We're launching this. It's kind of a soft launch. And then as we move forward, we're going to build these smart vaults, which allow the users to basically lock up assets in a contract that they own, in a smart contract that they own. So we don't need to trust companies like BlockFi or Celsius or any of this nonsense anymore. We need to move away from centralized finance and go to decentralized finance. And this is exactly what we're building.
Okay, very cool. So when did you launch? When was the launch again?
It was about 5 days ago, something like that. 6. Okay. I can't remember. I've been flying, but yeah, it's we're pretty amazed actually for the amount. It's like we haven't put much marketing in. We've been here on your show. We've been on a couple of other shows, but it's mainly been about just getting it started. And there's no end time to this. It's not a time-based thing. It's a volume-based thing. So as more and more people come in, the discount becomes less and less. Yeah.
Okay, gotcha. So we're up to 0.872. So it started at 0.8. And then can people who got in at 0.8, when are they able to sell?
Instantly. They're instantly. So you can instantly get that back. The thing is that there's this arbitrage opportunity, right? You can't really sell for more than, you can try. Some people have. It's interesting watching the difference between the Uniswap price and the initial IBCO price, because sometimes that price will bump up as people try to buy it cheaper on Uniswap because maybe it's dropped down, and sometimes cheaper here. So it's interesting, but Yeah, like I said, in stage 2, if you look up the top there, you've got those 3 dots. You've got get sEuro, and the second one is bonding. So you can get the full euro price instantly once you bond that. Well, instantly, I mean, you can lock in that instant value, and those are the bonding maturity dates down the bottom.
Okay, so the people who got in at 0.8 are already in the profit a bit.
Yeah, for sure. I mean, this is the golden thing of DeFi, right? You want to, it's a win-win situation. We need to build liquidity as a DAO, and the user wants to flip a quick profit, and so this is how this is how it works.
So I'll show you, guys. I'll put in 1 Ethereum right now because there's still a little bit of room. It would have been better for me to have gotten in earlier, but I'll go ahead and just kind of show you guys how this works, and maybe we'll even get a bond going. I've got my handy dandy Trezor, keep everything
very good,
safe.
Trezor is I still find the best hardware wallet. I know the guys personally down there in Prague. They're really, it's a top company. They were the first people to develop hardware wallets.
Okay, all right, very good.
If you have a look there, you've got 1.379 sEuro. If you look at the current sEuro price, it's 1.268. So you've instantly got a more than €100 on top of that.
Okay, very cool. And then I can bond it right away. Is that correct?
You can bond it right away. Yeah. Actually, if you go back and you want to add that sEuro to this to your MetaMask, you just add to MetaMask over there in that little link.
Oh, there we go.
Yep. And
add to MetaMask, and I can see it in my wallet.
Yep.
So easy enough. There it is.
And we're working to give that a nice icon and stuff. It just takes time. When you first launch, they don't jump.
Maybe you could do James Pelton face or something like that.
Hey, that's going to do better than any Doge face.
Yeah, that's right. So I have 1379. So I can bond. Oh, then you need to put in a second. Is that correct?
Actually, yeah. So it bonds with a USDC. So you don't need to put the full amount, but what we found is round numbers really lower the gas fees a lot for some reason. So we're working on that, but it's better to use round numbers. So you put $20 in, or $100 or $1,000, and it'll calculate the Uniswap difference. So basically, what's happening in the back end? There's a Uniswap pool, and it always needs an equal amount depending on the ratio that's in the Uniswap pool at that time. And so this is actually what's happening right now. Is when you click bond, it'll query the blockchain over at Uniswap and determine what to get.
Okay, very cool. Yeah, I just want to show people kind of this process. So I'm just grabbing some USDC. I didn't have any in my wallet. I had some Ethereum. A lot of times what determines how much I put into things is just how much I happen to have sitting around in my wallet.
Same. That's exactly the same with me.
Yeah, if I don't have to bridge anything, then it's like, okay, I'll go ahead and do that. But if I have to like bridge or something, then sometimes I slow down a little bit. So let me go back to here now. So now I have some USDC.
Yep.
Got 500 USDC.
Yeah, unfortunately, you can't put that in, so you have to sort of fiddle with the numbers up there.
Okay, gotcha. So it'll be like, maybe let's try 800. So you kind of just have to mess around with the numbers a little bit for now.
Yeah. But you don't need the full, the full.
True.
Lot. You can.
I like to maximize,
You do like to maximize. I see that.
So will this be okay, or do you think I should try to get the USDC to a round number?
No, that should be good.
Okay, and let's do this. Let's do this, and I have to approve the 2.
Yeah.
So, and again, people worry about gas fees, but like this is that costs $4 to approve that, so it's actually not that bad. It's not nearly as bad as it used to be.
Yeah. So now that's approving. So what's happening here, folks, is that in the back end, we're actually sending first you're approving that your wallet's allowed to send this much, and this is really important for security for other places. So you've got to always watch what MetaMask is doing in these processes on any website that you do this stuff on. It's really security wise, really, really important to do that. And then when you click start bond, what's actually happening is you're sending that liquidity into the Uniswap liquidity pool. And traditionally what would happen is you would get LP tokens and then you would stake those LP tokens. But what we're doing here is we're saying, no, put that in there. And what happens in Uniswap version 3, you get an NFT that represents that liquidity. And you're instantly selling us that NFT for the bond that matures in 4 weeks' time.
Okay. And then the gas fees are a little higher on this one, and that's because it's actually doing several things under the covers, correct?
Exactly. That's right. There's a whole bunch of stuff happening but we're still optimizing that as well. It's one of these things it's really tricky to deal with.
Yes.
What we're launching on Ethereum because the volume is just so much higher. There's just so much more going on that chain, on the base layer chain. The final product will be on Polygon or Arbitrum or one of the layer 2s. We still haven't fully hitched the horse onto which cart we're going to use, but it has to be layer 2 because, hey, especially for stablecoins, no one wants to spend money to send money. It's just not a thing. So
right.
So it needs to get cheaper. And yeah, so here under the rewards, you can see when your bond is maturing. There's a little bit of a graphic thing there, the percentage, but generally what will happen is that once that maturity bond has expired, has matured, that pending will turn into a button where you can claim your TST. So you've picked up really cheap TST. And then when you've got that, you can go and stake that TST over on this page for sEuro as well. So you get stable coins. So it's a nice little yield farming exercise. It helps build the liquidity. This is, as I'm talking with more and more people about this project, they're just blown away at what's really, really important right now, because they're hearing very, very terrible things about CBDCs that are coming out, and they need something proper. And this is what, when we look at the calamities that have happened through Terra Luna, waves, through some of these other stablecoin projects that weren't built properly, weren't built with normal economic theory based behind it. And what does that mean? That means you have a stablecoin that's actually backed by rare assets, like by Bitcoin, by Ethereum, by tokenized gold. This is so key for the future of what I feel is freedom of financial transactions. So we need a decentralized finance protocol running stablecoins, not only in the USD, but in sEuro, in Indian rupee, in shekel, in ruble, in Australian dollars, in every major fiat. Because once these CBDCs start coming out, people need an exit door to say, hey, if you guys put too much friction by forcing people to spend their money through an expiration date, or if you have maybe lockdowns where they restrict your money, there's all sorts of stuff coming down the pipeline with this stuff. So you need an exit door, and DeFi is that exit door. But for that to happen, for the exit door to be trusted, we need proper protocols. And so protocols like TheStandard, protocols like MakerDAO, these are the ones that are truly the future of DeFi.
Okay, very good. Yeah, and I do want to welcome people in the audience. I kind of forgot to do that. But yeah, thank you guys all for watching. Again, we're talking about TheStandard.io, and it's a stable coin that is backed by Ethereum, Bitcoin, and gold and real assets. It's actually backed stable coin, proven to be backed. Things like that. So that's what we're learning about today, Chance. So thank you for joining us. Please hit the like button. A question from Mr. C Deliveries: does sell pressure drop the price back down? So right now we're seeing the price go up. Will that price go down? Do you want to talk about that a little bit?
So no, the IBCO curve is a predefined curve. It's just a nice mathematical function that goes up quite steeply in the beginning and then curves off, as you can see there. the whole point is to build that liquidity pool. And right now we're already over collateralized because of the bond, because of stage 2, that bonding. So, right in the beginning, you're getting a discount. So you think, well, that means you're under collateralized, but the bonding process actually over collateralizes that quite quickly. And this will build the foundation. And you can always get sEuro and send it back later, but you'll get not the full sEuro price at the moment, because we have to wait for that curve to hit 1-to-1. Once that's a 1-to-1, now it's pronounced a stable coin, and it will have that liquidity. And in the meantime, we're working on the smart vaults, which will have all this beautiful stuff where people can lock up assets and mint brand new stable coins in the liquidity that they want. And not only that, if we're in a huge bear market and you see your collateral dropping, you can trade that collateral that's locked that you can't get hold of because you've borrowed money from yourself at 0%, by the way. So that's really cool. You'll be able to actually trade that to like Ethereum or tokenized gold, so you don't get liquidated, or you can sell it as an NFT. And that's something that's really some really great engineering's going into that.
Okay, very cool. No, and yeah, if anybody has questions, I know sometimes it can be hard to wrap your mind around DeFi in general, but one of the reasons I like this project and wanted to bring Josh on in the first place was to help educate about like, hey, what's going on? What is this stablecoin? So this is like a stablecoin generation event right now, where they're kind of developing the treasury to get it backed. Exactly. So it's kind of a cool thing. It's kind of like if you were part of any of the Tomb forks, there was this generation event that kind of is like, here's the kickoff. But once it gets up to the 1-to-1, then it will be a collateralized stable coin. And so, yeah, we have opportunity for a little bit of arbitrage right now while making that happen. Very,
that's
very
right.
cool.
And it's, the major thing that this really brings is the key here is that, so that we don't have another Luna or anything like that, is that we need a protocol that's ultimately transparent, where anybody can look in and see that there's more value, actual value, that we can't print out of anything because it's Bitcoin, it's Ethereum, or it's tokenized gold, and basically back the economy. So anyone can look in and see, oh, there's more value locked up than there are stable coins floating around. And that means it cannot go to zero because there's just more value locked up right there.
Yep. Nope. That makes a lot of sense. So then like the lending, that's coming later, correct?
The lending's coming later. Yeah. And the lending is really what that's the full product. And that's what I'm really excited about. This is just the launch event. It allows people to help the protocol while helping themselves. But we, the final vision really is people borrowing money from themselves, and why this is so important, especially through these hyperinflation. Well, it's not hyperinflation yet, but it will head towards there, towards inflation. Is that when you borrow money from yourself, meaning you lock up, let's say you have a smart contract on TheStandard.io, you'll be able to send Ethereum in, lock it up, and then generate up to 85% of that value that's locked as brand new sUSD, sEuro, sINR, whatever liquidity you need in whatever country. And then that loan is at 0%. So you don't get hit with capital gains tax because you needed to buy a car, which you would have actually just sold your crypto to do that. So then you get hit with capital gains tax. Rather, you've borrowed money from yourself. You haven't needed to go to a bank. You just send it to a DeFi contract. And this is so beautiful. We cut out so many inefficiencies by enabling people to borrow money from themselves, not beg a bank for a loan, but put that currency in, borrow from themselves, not pay capital gains tax because of that loan. Of course, they need to pay the loan back to get that capital back out, and that's the key. But this is at a 0% loan, so without a time limit to pay back. So what happens now? You've got that loan for maybe 5-6 years. Inflation is paying off that debt because effectively that the loan that you've taken out is a short on the dollar or the euro or the Indian rupee, whatever you borrowed in. And so when you go to pay it back, let's say inflation's dropped the value, it's cheaper effectively to buy back and pay back your debt and get the collateral out. And hopefully the collateral's gone up like crazy in the meantime as well. So, one thing that happened to me when, like 6-7 years ago, I had to sell like, 50 Bitcoin just for the deposit on a rental apartment. And I was like, man, if I got to keep that, I could have bought a whole apartment by now, just with that. So this sort of function enables people to still use that HODL mentality, but borrow against it. And the thing that a lot of people are concerned about in these times, in the bear market, and by the way, the bear market's really great for this sort of IBCO thing, because if you feel that market's going to crash even more, buy yourself some sEuro. You're not only getting sEuro at a discount, but you're hedging that risk of the lower ETH prices. So, but yeah, it's a really great function to launch, and yeah, we're all very excited.
Yeah, no, that is cool. And one of the things I like about it is obviously you have to be careful, because we could have another crash. So if you go right up to the 85%, you could get yourself in trouble. Although the bear market is when you would want to do that, because there's a lot less risk down here at 17,000 Bitcoin than there was at 60,000 Bitcoin. If you're using 85% at 60,000 Bitcoin, there's a lot of risk of it, if it drops that 15%. Whereas the odds of it dropping much lower than where it is now is way lower than when we were up at 60K. But what I like about it is it gives you the opportunity to hold a coin like Bitcoin and Ethereum. Like I want to hold it, but I hate just having capital that's just locked there in Bitcoin. You can't use it for anything else, like you're saying. So you can kind of get best of both worlds. You can hold your Bitcoin, you can hold your Ethereum, and you also can get some stable coin out that you can use for, some of these passive income plays that we talk about. So I really, at 0% interest, like you were saying.
Yeah, amazing. And yeah, that was exactly what I wanted to say. I'm really jet lagged still. It's a 180. It's on the other side of the globe. So So what happens in a bear market if you have collateral locked up in these smart contracts and the bear market's hitting? And that effectively what happens is that, as maybe you borrowed like half of the value that's locked up, if that value drops by half, then you're going to get liquidated. What does that mean? That means that all the assets in here is locked up. If other people are staking TST and they've got a smart vault, that gets distributed to all the other smart vaults that are staking TST to signal that they want to buy liquidated assets under spot. So not only if you've got a smart vault open, you can also get that trickle down. So this is where we're heading with the engineering of the liquidation process. But we don't want people to be liquidated. This is really, really important. So what we've done is, of course, there's tools like alarms that we will be able to set if the collateral is dropping too much. So what can people do? They can add more collateral in to the smart vault, which will lift them up a little bit more. They can start to pay back the debt if they feel like they're going to get liquidated. But let's say you've lost your job, you have no money to pay off your debt, you've got all this collateral sitting there in your smart vault, and you're like, man, I don't want to get liquidated. There's all this value there. I might as well get some of that value. So what people can do is actually sell that locked collateral as an NFT on OpenSea. And whoever buys that actually buys access to that debt. They buy that debt, and now when they've got that debt, they can pay off that loan and get that collateral out, which is worth way more than the loan.
Okay, so cool. Yeah, I was gonna ask. You kind of touched on it a little bit, but I was gonna ask, how the process is gonna go for liquidation. Like if you're gonna have alarms, if people are gonna get, a text message or something saying, "Hey, you're about to be liquidated." What are your thoughts on that, like best ways to notify people that that's about to happen?
Yeah, so there'll be a function where people need to spend TST to turn on these extra functions, so alarms, to be able to trade the locked assets. So let's say you've got a locked asset in ETH. ETH is dropping like a stone, and you can actually trade to a tokenized gold. Because gold is a really good one, because as everybody knows, if Ethereum's dropping or Bitcoin's dropping, pretty much the entire market's right. There's no real, on a macro level, there's no real diversification in crypto. It's just generally the market does. Of course, there's little pops and fizzles with other coins, but generally if Bitcoin's tanking, everything's tanking, everything's in the red. So what do you want to do? You want to trade to another rare asset that is on a different train track, but still in the same vein. So a rare metal instead of a rare number. And generally that will have way less volatility and won't be dropping like a stone in that moment. So so that's one option. Of course, it could also be tanking. There could be a massive global calamity and everything's just tanking, gold and Bitcoin and everything. Cash is king in that moment. So what can you do? And that's really where the selling as an NFT comes in if you can't afford to pay off your debt and you don't want to get liquidated.
Okay, so when you're putting in collateral to get the stable coin out, it says, like on the homepage, you can do Bitcoin, Ethereum, gold. Are you going to be using the PAX-G token, or how does somebody get that gold in there as collateral?
Yeah, that's right. So we'll be using PAX-G, but we've been running Vaultoro since 2015. This was the very first Bitcoin physical gold exchange that ever existed. We programmed that after the Mt. Gox collapse because we wanted to deal. We wanted an exchange that had true transparency, but we also wanted an exchange that didn't deal with banks and didn't deal with fiat, because a lot of people that had fiat on Mt. Gox also lost it. And they've still been fighting and crawling back. But gold is fantastic because it can be allocated to the user's name as their legal property. And it means that, and it's also fully insured. All banks in the States are only insured to 250K, in Europe to 100K. So gold can be insured to however much you've got because it's a physical good. So the insurance company will insure it to how much you've got. And so, and it can be fully audited. You can't audit banks. Banks just aren't auditable because, well, they don't want to because they're rehypothecating like crazy. So they wouldn't want to show that actually we've got negative, 400% collateral. Every bank is playing the same game that Sam Bankman-Fried actually is playing, except they're doing it legally under a regulated banner. This is why gold is a really good option. But yeah, so to start with, we'll be using PAX-G. Vaultoro is going to be tokenizing its gold. We'll have V-Gold from Vaultoro, so people can have the choice between an American company that's doing the gold or a European company. Gold is secured, in terms of Vaultoro, it's secured in Switzerland at a high security vaulting facility, fully insured by Lloyd's and audited by BDO. So there's lots of, it's a really great option. But basically what will happen is it'll just be there'll be a bunch of liquidity on Uniswap and that'll happen all automatically.
Okay, gotcha. Question from Mr. C. Doesn't people that are so we talked a little bit about this, but maybe you could just sometimes saying it again in different words. But doesn't people that arbitrage your token on the way up, doesn't it pull liquidity back out of your treasury if they sell once it gets up? Do you again want to kind of explain how that works?
Well, not really, because they're adding sEuro. So the sEuro then becomes more liquid because that pool happens. And then if that goes up in price, then people will be like, oh, there's an arbitrage there, the other way around. So effectively, it doesn't know, because that initial phase of the price going up is guaranteed. It's a solid mathematical function on the first stage that will drive the sEuro to €1, sorry.
Okay. Very cool. And actually,
we'll be having more. This is the very first event. We'll be having more of these. Every stablecoin that we launch, we'll be having an IBCO event like this. And so I think it's a really nice mechanism. It's a wacky one to get your head around. But for those that are in the yield farming space, the ones that have been really earning good yield by understanding what yield farming is in the beginning, for the last few years when DeFi really started to take off, they're the ones that have made money, because you really want to stack sats, right? At the end of the day, that's what you're on. That's the whole premise of yield farming. So for people, especially on your channel, that are looking for great opportunities, I'm not saying, this isn't the only great opportunity. Yield farming, you definitely look into it, figure out how to do it, learn what it is, some of the strategies that people are using, and get amongst it, because there's some good stuff. And that's not financial advice at all. It's just something, definitely educational advice. Educate yourself on some of these new tools.
Yep. And this is true DeFi. So a lot of times we use DeFi as a placeholder for just anything in crypto that does anything. And that's not really DeFi. Like I have a lot of projects on here where we use DeFi, but this is true DeFi. That's what this is.
Yeah, thank you.
Question that came in too. What happens if you're collateralized 1-for-1? What happens when Bitcoin price drops? Does that ruin the collateralization, or how does that stay pegged?
Yeah. So during the IBCO, there's that initial phase, and that is important. If Bitcoin drops, there can be an under collateralization just there, but this is just the launch event. It's really the smart vaults that we'll be launching that provably are over collateralized, and we're long Ethereum and Bitcoin in terms of psychologically. Like, we're at the bottom of the market now. I don't see it doesn't, in terms of length of time, this will over collateralize. There's no ifs or buts in my mind. Of course, it is still a speculation, and our yield farmers are of the same mind that Ethereum's long in the long term. In the short term, we don't know, but in the next year or something, we're totally sold. So we're launching these smart vaults. The aim is by March, April, February, March, around there is when we're launching those. So, but yeah, it's exactly right. So that's the speculation. Nothing's without risk, guys. Please don't do any of this if you can't afford to lose what this is invest 101 with putting your money into any project in DeFi or anything in life. Don't be careful. This is really highly speculative, experimental, but it's also quite rewarding on multiple senses, on psychological, on a spiritual sense, because we're going against the big bankers. And also, on a financial sense, I think it's quite rewarding too. It could be, I guess.
Yeah, absolutely. And this would be way riskier, like you were saying, and the bull market. If Bitcoin was up at 60K and you were collateralizing one for one, there would be a lot of risk there, which is kind of similar to what happened to Luna in a lot of ways. They were kind of backing UST with Luna, and just the dynamics that they had couldn't hold up under exploits and things, and the attacks that people put. It wasn't even an exploit, really. It was just people attacking the stability, and they were able to take it out by just throwing enough volume at it.
Well, and for those that don't know, just to back up on Luna, really to understand, and I think we touched on it in the last show, but I think it's a really important thing, because I get this all the time. About how's it different from Luna? Luna worked like this. You had UST, which was pegged to the US dollar, apparently. That was the goal. And backing it, to back the one, so this coin is pegged to the US dollar. Now, how do you get that? How did they try to get that? They said, okay, we've got this governance token called Luna, and right now it's valued at, let's say, 50 cents. So we just need to print 2 of them and back that one UST with 2 of these, because, hey, 50 cents, 2 of them, that's $1. Whenever you want to sell that, if you cannot get that, you can just sell the Luna for the $1. Now, that's like, oh, that works. But I knew it wouldn't work in 2019 when I was on stage saying this is going to fail massively. This is, I don't want to call out scam, because I think there's a lot of experiments out there. People are trying experimentation. I don't want to just blatantly say that it was a scam from the beginning, but the fact is that economically thinking about it, it just doesn't work in a bear market, because they have the power to print as many of these governance tokens as they like. And that's exactly what they did. So when Luna dropped to, let's say, 10 cents, they need to print 10 of them to back that one UST. If it drops to 5 cents, there's 20 of them. So what ended up happening, they printed trillions of these things, and it just fell out of control. And this is exactly what happened with BitShares, with some of these other algorithmic stablecoins, because algorithmic stablecoins do not work. We shouldn't trust them. Stablecoins are far too important part of this ecosystem to trust hardcore experimentation with. Look, experimentation is great, but we shouldn't, as a community, let these things get to hundreds of billions of dollars, and then wonder when we get hardcore, punishment when it collapses.
Yes, very good. How is this different from USD Plus that overnight Fi is doing? So one thing I'll say, they're actually investing, I believe, to get yield generating strategies. Are you guys going to be doing any of that type of stuff with the treasury or anything?
Yeah. So the pool that's being built now through the IBCO, that's the only pool that's like almost like a shared smart vault. So the DAO will be voting on how to basically deploy that, and people staking TST will get the reward of all of that capital being deployed into other DeFi protocols. That's the one of the biggest things for me is to balance risk and reward, and because I don't want the DAO also to purely vote on maximizing profit, because they can then deploy stuff into really risky assets. So there'll be a little bit of hedging into gold and stuff like that. So we'll be talking about that in our Discord channel, and everyone discusses, okay, we should deploy 10% here, 10% there. There's a really good opportunity here, but also the point is to make sure that there's enough liquidity for the sEuro always.
Gotcha. And then some of these projects, like I noticed, Overnight is doing this, but they have like an insurance fund. Are you guys planning anything like that just to protect against who knows what?
It's something that's been going around in my mind for a long time. It's where I find prediction markets to be really interesting in terms of a decentralized thing, because if you look at insurance funds, they're very centralized. People could run off with large amounts of money. They could be hacked. And they can be speculating in the back end if it's centralized. So we don't want to rely on insurance companies as such. But let's think about what prediction markets are for a second. Prediction markets are effectively an insurance. You have two parties betting. So we could have funds in a large pool and people bet like, the market's going to go to hell, like the whole stablecoin is going to collapse. The other side says, no, it's not. And that's effectively the insurance, because whoever's right wins that pot. And so that's one of the things that I've been thinking about a lot. It's not on the forefront of our development, but it's something that's in our mind.
Okay. We do have some good questions too from the audience. I was wondering, so if you want to swap back, you're trading your sEuro back for, can you get out any Ethereum or Bitcoin or what can you swap it back for if you want to kind of redeem it?
Well, eventually anything, because it's Uniswap. So you can, Uniswap even allows you to do stuff that isn't in the pool. The pool will connect to other pools. So effectively anything. We're building like the second stage here, the bonding stage, is literally building a Uniswap pool in the back end.
Okay, so you could swap for anything there, really.
Yeah.
And then Mr. C would like to know, have you tested it under fire from exploits? So how concerned are you about some hole in your contract that allows an exploit or something like that? How big of a concern is that for you and your team?
Massively. It's always a concern. Look, we've run Vaultoro, which is, we were the first exchange to offer Bitcoin physical gold back in 2015. We're the first exchange in the world to implement the Lightning Network. We've never had a hack. We were fully transparent. So we're obsessed with security. We have on the advisory board Hartej Sawhney, who was pretty much the grandfather of smart contract auditing. He was one of the very, very first to start this when Ethereum launched. So Hartej is on the team to make sure also this doesn't happen. We have some of the best engineers working on this. So really, it's one of the things that you don't know what you don't know. So there's never any guarantees. But this is actually one of the reasons why Ethereum's also really, really interesting, because the gas fees are high. You need to optimize those smart contracts like anything. You need to look at every line of code and say, do we need that bracket there, because that's going to cost a little bit more data. But so can we like shrink that by restructuring that line? Now, what happens in that is that you reduce your attack surface a lot. If you're on something like some chain where, hey, it's like microcents for a contract that's just huge, then people just program any old crap, and there you get really bad vulnerabilities. So this is one good thing about Ethereum, is it forces you to really study and study and study, not only under the fear of there being a hack, but also, hey, I want to write a really, really tight and focused smart contract.
Okay, very good. And I thought this was a good question to help people think through the economics side of thing. But rookie question: if a stable coin is pegged to the US dollar, so we'll say that the sEuro is pegged to the euro, and the euro crashes, what happens to the value of the stable coin? Would the stable coin be worthless?
If the euro crashes, yeah, it'll follow. Like, the whole point is to peg that stable coin to the euro. But this is why it's important to have a debt out in that. Imagine if you've locked up $10,000 worth of Ethereum and issued a whole bunch of stable coins, and it's pegged to, well, let's say the US dollar, and the US dollar goes to zero, then effectively it won't ever go to zero. But if it starts to really tank, then you can pay off that debt for way cheaper. So you're actually allowing this US entity or the euro, the ECB, the European Central Bank, to pay off your debt.
Yep. And so just so people kind of understand, inflation is really good for debt holders, because basically your loan just goes down on its own. Just inflation takes care of it. So if like Josh is saying here, if your the value of the coin that you have the debt in goes down, then you have to pay off less as time goes on. So
that's right.
Like you were saying, it's kind of a short on the coin that you're taking the debt out in.
Yeah, and this is what this has been the secret of the wealthy for many, many years. It's just that the wealthy, it's just that the wealthy have a lot more leverage with their bank. So if you were to go to the bank and say, bank, I want a loan, and I want it at fixed interest, because that's the key, fixed interest during inflation. Because if there's a massive inflation, generally, and we're seeing this now in the US, they lift interest rates to try to hold inflation back. The problem is that then causes more cascading, businesses to fail, people to take out less loans. So it's a downward spiral. What they'll eventually do is lower those interest rates again, and then you're back to more money printing. Now, what the wealthy did traditionally to try to like earn money or keep the value of their money, or become even wealthier, is borrow from the bank. But they would go to the bank and say, give me a fixed interest loan, so I'll pay a little bit more, but I want it fixed. And the bank will go, okay. And here, this is the secret now, which the normal person couldn't get. They say, and do not reevaluate my loan for inflation. And the banks are like, oh, no, we can't do that. We can't do that. And they say, well, look, you can, and you will. Otherwise, I'm going to another bank. And now these are wealthy, so they've got large amounts of collateral and capital to throw at the bank, and the banks go, okay, we'll do it. And that's how they win, because they basically get these contracts to say, I'm going to buy vast amounts of farmland. We see Bill Gates. This is what Bill Gates has done now. He's bought a heap of farmland in the States. I think he's now the largest farm owner
by far. Yep.
Right. And why has he done that? Because he knows inflation's coming, and he's borrowed. He hasn't paid cash for any of that. He's borrowed like heck, and he's made these contracts with banks. Fixed interest, no reevaluating the debt. Now, this is what the beautiful thing is about TheStandard.io, is that you will have 0% interest, fixed, and it's a smart contract. It cannot reevaluate the debt. It can't do any of that. So the normal person starts to have access to these sorts of tools to let inflation work for them instead of against them.
Yeah, no, it's very, very cool. And I encourage people, if you're not familiar, just study up on debt, because we have Dave Ramsey and people like that here in the States that say debt is bad always, pretty much.
Yeah.
And
Ridiculous.
debt is actually one of the best tools that rich people use. That's one of the big differentiators I see between wealthy and the middle class and lower class is the wealthy know how to use leverage. They know how to use debt. Now, if you're using debt to go buy a fancy car, that's not good. But if you're using debt in US dollars to go buy farmland that is going to appreciate faster, like the US dollar is going to depreciate, farmland is going to appreciate. So it's good to take out loan in an inflationary asset to get a deflationary asset. That's a really good trade. And like you said, that's what Bill Gates is doing. And DeFi allows us to kind of do similar types of things. So something, and make sure you understand what you're doing, but definitely kind of research that and look into how that might fit into what you're doing.
If you're just saving in the bank during inflation, you're basically not saving anything. You cannot possibly fight the beast that is inflation. It will eat up your savings. What you can do is buy rare assets like land, like stuff that can't be printed out of nowhere, forestry, even like pork bellies and commodities are a good hedge because people always need to eat. But you don't want to be just holding cash that's being inflated away. That's stupid. And weirdly, in Germany's one of the largest savers in Europe. Like they're saving billions and billions in their bank accounts. It's the weirdest thing. Whereas a lot of the other countries aren't. And I guess this is what has made Germany rich is that they do save, but it's going to hurt during inflation because all of these people, they don't know. And we're seeing property prices in Berlin alone, like double, triple in the last few years because everyone's taking that capital that they've saved and they're thinking the same thing. They've been through the Weimar Republic, which is the big hyperinflation that happened in Germany before World War II. They've seen all this. They've been taught all this. They've got great grandfather on their shoulder whispering, the angel of great grandfather going, oh, put something in gold, don't trust the fiat. And this is exactly what's happening now. They're dumping money into property. They're dumping money into gold. They're dumping money into farms and all sorts of stuff to get out of that system.
Yeah. And this is a really good point too. You brought this up earlier, but tax isn't paid on debt, only income. So for example, if I'm holding a Bitcoin, we'll say, or let's say I'm holding 10 Bitcoin or something like that. If I have some expenses or I have something I want to do that requires some capital, if I sell the Bitcoin, that will be a taxable event and I'll have capital gains taxed. If I haven't held it for a year, it'll be short-term capital gains tax. In the US, we tax at like 37%, something like that. But if you just hold the Bitcoin and take out a loan in sEuro, there is no tax on that. You hold your Bitcoin, you never sold anything. Now you can go do exactly the same thing you were going to do with what you sold with your Bitcoin, but there's no tax on it instead. And this is something. So again, I sold my business for 7 figures and I had a bunch sitting in the stock market. And rather than selling stock in order to like pay my bills, I would take out a loan collateralized by my stock position. And then I had these expenses paid, but no tax on it for selling the stock. So it's kind of the same idea there.
Really important to think about because taxes are the biggest expense of your life, anybody's life. And so you don't want to dodge tax. Like that's not a thing that anybody should promote. It's, I don't like taxes. Nobody likes taxes, but you need to optimize. You need to understand the code. You need to understand what's going on there. So you need to optimize for the taxes. Otherwise, you're just going to get wrecked over and over and over again because you don't look for the best deal. It's like saying, you don't want to go to a shop and steal something, but you want to go and look for the best deal amongst multiple shops. Like you want to start to educate yourself on what's on offer. And this is exactly the same with taxation.
Yep. Nope. Very good. Very good. Like it. And we talked a little bit about this. Maybe we'll close with this unless anyone else has any last minute questions. I love talking with you, Josh, and just thinking through some of this stuff. Again, it's
Thanks,
pretty
James.
rare to have like true DeFi projects come on that are actually talking about real economics instead of some weird made up tokenomics about, buy and sell tax and things like that. So I
Yeah,
like it a lot.
thank
But
you.
stablecoins are fully backed with assets, it sounds like, including Ethereum, Bitcoin, and gold. Would stablecoin depeg if Ethereum and Bitcoin drop another 25 to 50%?
No,
And
like what? Yeah, once the smart vaults are there, it's not going to depeg because there's more value locked up in those things. So all that will happen is that people will be able to buy those liquidated assets under spot by basically buying them with sEuro, and those sEuro get burned. So it removes sEuro out of the pool and out of circulation, and it also takes out some of basically the system scales down automatically. But the beautiful thing is that everybody can check that there is always more liquidity, real assets locked than there are stablecoins floating around. And now this is outside of the IBCO event. The IBCO event is just an initial minting event. It has nothing major to do with the entire protocol. And this is why I like to talk more about what's coming than the actual event that's happening right now that people can take part in. But yeah, so to answer your question, no, it will always stick.
okay. Yeah. And Graham says, sorry, missed this. World Cup is on. We'll watch at full time. So, yes, yeah, if you missed any of this, or if you're watching the World Cup game and you can't get away, then for sure the replay will be available right when we're done here. Very educational, not just pitching a project, but I think you'll learn a lot about how stable coins work and things like that. So, let me go ahead and one last time kind of show you what's going on right now. So, this is kind of the initial offering of this stable coin, and so we're on this this kind of curve right now. So if you get in before the sEuro gets up to $1, there's a chance for some arbitrage there, and then like I showed you, you can do the bonding as well, and then you can get a pretty decent return for 4 weeks of nothing, right? So good opportunity getting here at the generation. Can you, one last thing I wanted to see, what's next on the agenda? How long before, I assume sUSD will be next, or what's next, and how long before the next?
So the next thing is these smart vaults. They're coming next. We've been really working hard on those, and then after that's launched, we will look at sUSD. We'll look at Indian rupee, because there's billions of people there that would use this, and our market research is really going like, wow, it's amazing that they want it. And then we're looking at what was I think Turkish lira, because they're going through a pretty hardcore inflation, so they would be able to use this very, very well as well. And then we'll be rolling out other features along with the smart vaults as well. So there's lots of good stuff. This is what bear market's for building and watching weak projects move out the way for solid projects like ourselves.
Yes, absolutely. Well, we'll wrap up there. Audience, thank you guys for watching. Please hit like on your way out. And if you're wanting to, again, I'll post a link just to this page, but it's just TheStandard.io, and you can enter the ICBO. Is that right? It's some letter.
IBCO, initial bonding curve offering. Yeah.
Okay. Initial bond curve offering. Okay, I'll try to remember that one. But yes, and Josh, thank you for hopping on. Thank you for sharing your expertise and your passion for stable coins. Actually, I might like to have Volturo on it, and that looks pretty interesting too. But maybe we could talk about that sometime as well, because that looks very interesting as well. But thanks for all you do for the space.
Hey, thank you very much for what you do in the space. Education is really the key. This whole push to like regulate the hell with guns, and when I say guns metaphorically, the state coming in with man-made rules. Really, the answer is DeFi, which code is law. But to make that happen, we need education and to educate the market of what things look like, what opportunities are out there, what scams look like, and how to deal with them. And so thank you very much also for what you're doing, James.
Absolutely. Yeah. I want to give people opportunities, but sometimes education is what you need to in order to take advantage, like the debt part, you know, like that's something you
Yeah.
just have to understand how the rich use debt, and then that's a tool that you can add. You do have to be careful with it. I want to again preface that, like
Yeah.
I got liquidated on Nexo for doing the
Oh,
same thing. I had Bitcoin at 60K, and I was
yeah.
I was taking out a 70% loan against my 60K Bitcoin, and then Bitcoin went
Yeah.
down to 16K, and that got
Yeah.
liquidated.
Yeah.
Nexo didn't do a good job of notifying people. I
No.
thought so.
Yeah.
Yep.
Yeah, that's unfortunate. And just one last thing to back that up. Even if you get liquidated, hey, you would have had to sell the Bitcoin anyway to buy whatever you were buying with that. Anyway, it's just that you would have taken like a 15% extra haircut on that. So it's even then, it's not the worst thing, because let's say that function didn't exist, you would and you need to buy a car, you kind of would have sold the Bitcoin, right? So yeah, it's not good. The XO needs alarms. This is what we're really focused on, to stop liquidations as much as possible, and that's why some of the technology and the engineering that we're putting into this.
Yep. Absolutely. Well, thank you very much. And yeah, everybody, I hope you have a great rest of the day and hope you enjoy your weekend. I haven't looked at my calendar, but I'm sure I'll be back tomorrow and talking about something else. So appreciate all you guys and hope everybody has a great rest of their day.